So GameStop had this situation where the hedge fund traders were shorting it. Now, what is shorting, right? Shorting is where we sell to open a trade and then buy to close it lower. So you're actually selling before you're buying. The rules are still the same. The rules are buy low, sell high. But if something's high and you expect it to go down low, you would short it. You would sell first. You would sell high and buy back low. And you can do this in the markets because uh, by the rules of the rule makers of the market, our brokers have to keep a certain number of shares on hand in order to be brokers. And so what they do is they actually loan out those shares because they just have to hold them. They have to be a holding place of them. But they can loan out those shares to the individual investors that are broker clients, and we can sell those shares so long as we promise to buy them back and return them back to that reserve. And so that's called shorting, and it makes money for the individual investor if the price of the underlying symbol goes down. So hedge fund traders were shorting GameStop. And if you think about it, if you do a lot of shorting, there's a lot of selling pressure. You're going to make the price go down, right? Well, folks, and this is just what social media the power of social media. Folks on Reddit got together and say, hey, let's outsmart these hedge fund traders, right? And if you think about it, if you've got something that's going sideways, what you've got when something's going sideways and you see it going up and down, but it kind of peters out either at a level of resistance or at a level of support, is you start to get attention by folks. And so, for instance, if you've seen it go down to a certain level before, you might call your broker up, and this happens all the time, and you might say, hey, next time it's at that level, I've always heard to buy low and sell high. Just buy me some of those shares of GameStop. So, okay, there's all these buy orders waiting to trigger when the price gets low enough. And what happens when all those buy orders trigger? Well, obviously that creates a demand and that pushes the price back up and an accumulation occurs. Same thing happens up here at the top. So when you start seeing all of that level maybe up here that the stock doesn't go any higher to, you say to your broker, by the way, if the stock gets any higher, go ahead and sell it because that's the level that it seems to top out at. So there's literally a whole bunch of sell orders waiting so that when price hits that level, selling will occur. And of course, that makes the demand go away and the price will drop. And that's kind of an ongoing thing. And as that happens more and more people get the attention of this and more trades come in, and it actually solidifies those levels of support and resistance. And so it's a self-fulfilling prophecy. When you start to see that many tests of support and resistance, it literally is all these investors that now have skin in the game. But the same thing happened, by the way, and it can also be in reverse, can't it? In other words, instead of when I'm up here, I'm selling to close, I could also be shorting, selling to open, and looking to buy to close at the bottom. It's a sell order and it's a buy order. It just doesn't whether it's to open a trade or close a trade, whether it's to go long or short is beside the point. It's selling and buying. The other thing that happens is that people above this level, because everybody knows that every once in a while there is a breakout. And so what that means is that the underlying symbol goes outside of the channel and then shoots high. And so everybody likes to catch these breakouts. So the same person who's on the phone calling their broker saying, do me some buying at the bottom and do me some selling at the top says, oh, by the way, if it goes a few dollars higher than that resistance level, do me some buying. because I think it's going to be a breakout and I'm going to catch that. So, literally a few dollars above that level of resistance, there's a whole bunch of orders waiting for buying. Not only that, these people who have um, shorted their position, they have a level here. It's like a stop loss order. It's a an order to cover, buy to cover, and it's how these shorting people, these people who have sold, protect themselves. If this price goes high, they're going to go ahead and buy those stock shares back so they don't lose too much. Because remember, they sold here and they have to buy back to return those shares to their broker, to their broker's reserve. And so they don't want to lose so much on the spread. So they have their buy orders there. Plus, other people are saying to themselves, I want to catch that breakout up. So I'm going to put some buy orders. So there's always buy orders right above resistance, whether it's protective buy orders for somebody who's shorted, or whether it's buy orders for people who want to catch a breakout. And same thing happens below support. There are sell orders down there, whether they're stop loss orders, where people who have bought some of the stock, they're like, oh gosh, the underlying symbol price is going down and I better sell and get out of it. But there's also people who are ready to short because they want to catch a down breakout. And so check this out. Usually it's hedge fund traders or mutual fund traders, it's big money traders who have the purse, have the amount of cash necessary to basically counteract all of these sell orders up here and then keep the price moving. So they keep buying as much as these people are selling. They keep buying, and they just have to buy a little bit more than the amount that was selling to push the price of the symbol up into that range where people are buying to close in order to protect themselves, as well as people are buying to open in order to catch a breakout. And that's exactly the difference this year, was that it wasn't a big money trader who pushed that. It was a whole bunch of individual investors. It was the year of the individual investors who got together in their tribe on Reddit and each put in a small dollar donation, if you will. You hear about all these political leaders getting they're getting elected on small dollar donations rather than the big money. Well, it's the same thing in the markets, right? All these people got together and coalesced around GameStop, and they literally pushed the price up to where the hedge fund traders, all those bazillion of dollars that were shorting the symbol, all of a sudden had to buy to close, and a whole bunch of other people saw what was happening and they jumped on board doing some buying, and it caused the price of GameStop, as you can see over here, to shoot up immensely at the beginning of 2021. And of course, once it hit the top, all those Reddit folks jumped out at the high price. But ever since, what that does for the company when you start all of a sudden is that increases their capitalization. That increases the amount of money they have to spend. So they use that money to basically reposition themselves. And so GameStop's actually been really kicking butt. I mean, they're not as high as they were, but even after all those initial, retail investors pulled out, and it's, the leftover folks, their capitalization is way high, and it's giving the company a second breath.